when I see people doing renovations, right, I always tend to feel that people go quite emotionally into some of these things. And so they always sort of overcapitalize into the renovation projects. And that's where they end up losing a lot of money. It's important, I think, knowing your risk appetite and knowing your passion and stretching yourself, not to the extent that you start burning yourself. Owner-occupiers is what drives the growth in any market. And typically that's the best strategy from a long-term perspective. Hello and welcome to Helpmebuy Property Podcast. Today we are going to talk about a transitional journey of a real estate agent turned an astute property renovator. We're going to talk about the transition that this person took from a real estate advisor to a full-time property renovator doing 17 property renovations in a single year. We're going to talk about his biggest pitfalls, his biggest failures, and the learning process that he got from his life. What was the key turning points in him becoming a renovator, and who were the people that he looked upon when he started developing his own life into the property renovation world? We are going to also talk about a real project, a real deal in the field, where we are going to talk about his key points and takeaways when he's trying to identify renovation projects. How does he fund them? How does he find them? How does he renovate them? And we're going to also talk about how does some of these renovation projects works when he's trying to sell them. How does the transactional cost comes into place? How does the acquisition cost comes into place? And how does he raises some of the money? So stay tuned till the very end for the golden nuggets. Thank you for listening to me today. Have a wonderful day. Today, our topic is really, really important. And this is a topic that is really close to my heart in a sense that, I haven't done a lot of renovations myself. And so the guy today, drum rolls, Graham Whitfield. The guy today, Graham Whitfield, is the king of renovations when it comes to his story, his lifestyle, the way he pulls out the renovations. We'll go into a lot of detail talking about it. Let's do a big shout out to Graham. Graham, how are you today?
Well, thank you, Moxin. I appreciate coming on the show and having a chat with you and talking all things reno and flips.
Awesome. And who was Graham before? Let's start right at the beginning. You didn't start it off in renovations, right? And so talk to me a bit about before renovation lifetime, right? What was Graham 5 years ago was doing? And yeah.
Okay, so from about mid-20s to sort of mid-30s, I think about 9 years or so, I was selling new homes. So I was doing that, new home sales, selling house and land packages in Perth and that sort of thing. Yeah, enjoyed sales. It was good industry to be in when you were sort of that age. But then after a while, the Perth property market got pretty average, and I sort of got a bit burnt out and had enough, I suppose, and decided to jump out in 2019. And I actually worked up FIFO at North WA. I worked in an emergency services role, did that for a couple of years. But while I was away, I sort of started, I knew I've always sort of wanted to, do my thing rather than sort of work for somebody else. And I decided that I would, I sort of ended up renovating and selling a house, one of my investment properties. And then I sort of ended up, liked what liked the experience, and ended up doing some courses while I was working FIFO on how to flip houses for profit. And jumped in and ended up, a couple of years later, I've done 17 projects now, 17 flips.
Wow. And it's interesting. I think from your perspective, the transition of you living a life of, selling houses was quite commission-based as well. So was it easier for you to do that transition into the business that, you knew that, there is a lot of contingencies around renovations, and you may see small profits sometimes and big profits some other times?
100%, yeah. So the fact that I was, a commission-only sales rep for so long, you're used to that. You're used to getting paid for your results rather than, an hourly rate or a salary type thing. So I mean, I sort of did, when I sort of did a couple flips, and then they were sort of really successful, and, I'd made pretty good money on those. And then I sort of, my thing was I quickly teed up a couple more projects, and then I quit the work that I was doing away FIFO, and went full-time into property flipping pretty much straight away.
Amazing. And so let's talk about your first project, right? So how did the transition really happen? Like, what triggered you? Why renovations? There's 10,000 things that you can do in property.
Yeah, okay. So the first one, in early 2021, I had an investment property that got pretty trashed, I suppose, from the tenants. They'd been in there a long time, and in order for me to sort of rent that out again or whatever I was going to do with that property, it needed a renovation. So I ended up renovating that property for about 38 grand, and I actually did really well from it. And then I thought to myself, oh, there's something in this, so I was renovating and then selling for a profit. So I, obviously things happen for a reason. I saw a course advertised, basically flipping property for profit sort of thing. And I sort of jumped in and I got a coach, and I think, within a month or two of me doing it, I had sort of 2 projects, and the first one was actually a property in Waikiki, which is part of Rockingham in Perth, WA. And the renovation took me a month or so, and I sold it and made 92 grand profit on that first project. So that obviously gave me the appetite to keep going.
And a lot of the times when I see people doing renovations, right, I always tend to feel that people go quite emotionally into some of these things. And so they always sort of overcapitalize into, the renovation projects. And that's where they end up losing a lot of money. What about your failures? Are there like biggest failures through your learning process that has been where you'd be like, shit, I shouldn't have done this, or I shouldn't have selected that expensive flooring here, or it didn't really needed a 40 bench top in this house. We would still get the price.
100%. Look, it all comes down to knowing your market and knowing who your buyer is. So when you're starting out, of course, you're not going to know your market as intimately as you will, the more experienced you become. So, I'll give you an example, and I'm sort of pretty vocal on what I do. I've been playing in the sort of the lower end market in Perth. There's been a lot of interstate investors and that sort of thing targeting the market. So I know exactly what I need to do and what product I need to deliver for those guys. They're chasing rental yield, so I don't have to spend too many dollars on the rear landscaping and stuff like that, because, there's going to be a tenant in it who lives in it, and they're not overly worried, but there's no emotion as far as that. So, when you're starting out though, you try and make everything perfect, which you just don't need to. So you end up spending, a little bit too much money. You might be putting back to in the lower end, you might be putting back to wall toilets, and for example, which you just don't need to do. So there's different things like that. There's and same with your tapware and that. You might be going fancy black tapware, and you might be going, or gunmetal grey or whatever, brush nickel. But the reality is, if it's lower end properties and it's interstate investors buying, like in my market, I know I don't need to spend money on that sort of stuff, So whereas at the start, you think to yourself, if I spend a little bit more money, I might get a bit more back. But it's not like that, It's different if you're playing in an owner-occupier market and it's a more expensive market, then of course, you need to deliver what the buyer wants.
And that's so true. I think one of my sort of learnings from the renovations that I've done in my prior life, I don't claim to do a lot of renovations in my property journey, is that playing in the owner-occupier market, and typically if you renovate it too quick and bring it out to the market, one of the lessons that I learned was that people think that it's a shonky renovations, right? Because it's an owner-occupier. It's very paranoid owner-occupier who think that, this property was sold for $400,000 8 weeks ago or 3 months ago, and they're bringing this now this quick. That means that they have just, done a lick of paint and brought this property out and asking for an extra $200,000 for the sake of it.
Yeah, potentially, 100%. I mean, it really depends on the market that you're playing in, 100%. And an owner-occupier market, their wish list is going to be different, and the more expensive the property, the higher the higher end that you're playing in. Obviously, you're going to have a smaller pool of buyers, and if you don't nail it, you're going to come off not all that great. I suppose if you're working in that higher end of the market, you'd want to be working with the real estate agents who's going to be selling the property for you, making sure that you're able to deliver the right product that the market wants. So that's why, the people that I sort of coach and stuff as well now, I sort of recommend that they sort of start at the lower end, because, there's more room there's bigger pool of buyers, more room for error as well. And yeah, it just makes a lot more sense to.
And so if you take a step back, what are the three key lessons that Graham has learned over his, all of these lifetime in real estate? Renovations, no renovation.
So what was that? So three key
lessons that you've learned, or the mistakes that you've made that has helped you become a Graham version 2.
Yeah, okay, good. That's a good question. I think the biggest one is data, looking at the data and knowing what the market's going to do. I mean, I started investing in Perth as a probably 25-year-old in 2009. I think that's about right. And yeah, the market in Perth went, everyone knows how badly the Perth market tracked from the GFC through to 2020. Our median house price was about the same. So if I had done the same investing that I did in Perth back then in, say, Sydney or Melbourne, it would have been much different. So I suppose I've learned a lot about property analysts. Someone I sort of follow quite closely is John Lindemann. I have a lot to do with him. And and just looking at that sort of data to make sure that you're buying in the right areas, that that you're timing the market right and that sort of stuff. Because if you're buying at the wrong time, then you're not gonna make profits in investing.
What about feasibilities? What about crunching the numbers and knowing your numbers up front?
Yeah, okay. So when it comes to the whole renovation space and flipping, feasibility is everything. So you need to be able to know all your numbers. You need to be able to know, you need to be an expert, like almost an area expert. You need to know exactly what the end sale is going to be, because that's how you're going to come off on the badly, is if you're overestimating what the end price is going to be. So really important to know that what it's going to sell for, and the only way you're going to do that is by having relationships with local agents, by getting into the knowing the area well, walking the streets, attending the home opens, all that sort of stuff. So crunching the numbers is really important. But the longer that you sort of do renos and feasibility and all that sort of stuff, like I'm at the stage now in my market, I don't even really have to do a feasibility, like as far as what the reno cost is going to be. I know what it's going to cost when I look at it, but that comes with experience. So yeah. So, and then the third thing would be with flipping is just knowing who the buyer is, which I sort of touched on before. If you're gonna flip houses, you have to know who the buyer is. Otherwise, you're not renovating it to what the market wants.
And has there ever been a time where you bought a renovation, you had an estimation in place, or you thought you knew that this is what it's going to cost in renovations, and then next thing it's $50,000 more, $80,000 more than what you originally thought?
Yeah, so I actually had a project last year, and it was, I was forecasting a pretty decent profit, sort of 150 plus, and it was when the interest rates started like really going, and I sort of settled on it just as the interest rate started taking off, and then by the time I finished renovating it, a few months later, the whole owner-occupier market had changed in that Fremantle area. And look, when I went to sell it, it was on the market for about 3 months, and I just couldn't sell it. And I almost took it off the market and almost rented it out. I was contemplating, having that one as an Airbnb for a bit until the market changed. But I ended up getting a valuation done as well, independent valuation, just to see, because I did my numbers. I thought, surely I can't be wrong here. And the valuation ended up coming in at like 1.3. So I was like, well, it's not much lower than what I expected, but I ended up taking 1.2 on that project just to be done with it, which meant I'd come out pretty much, without any sort of hurt, I suppose, or not. I think I might have lost 5 or 10 grand on that project or something like that. So that was a massive learning for me, because, and I'll tell you the reason why it was a massive learning is I've just hyped on about knowing your market and being an area expert. And there was a couple of things in that project that I got wrong. Okay, so that it was an area that had a lot of heritage properties and that sort of stuff. And this particular property wasn't a sort of a character home. So I was sort of, when I did my numbers and my feasibilities, and even though I was speaking to agents and all that sort of stuff, I was really comparing it to other properties that were really, because there was nothing really like it. So I was comparing it to other sort of 3x1s, 3x2s that were more character homes. And it's just not what the market wanted. So that was a big learning for me.
Amazing. Amazing. And if you talk about the recent wins, or let's take a step back. I think let's try to dive deeper into some of these things, that comes in, and I'm going to pivot some of these questions into some of the questions that are coming in my mind right now. The first one being the biggest problem that a full-time renovator faces is the serviceability issues, right? And so you're running a full-time business, there is no income anymore. How do you make the transition? What do you do differently? Because clearly you're still using the debt, right? And so how do you convince the bank? How do you solve that problem for for yourself?
Yeah, okay. So I actually mostly use money partners for my deals rather than banks. So because I've been playing on the lower end of Perth, like I've been buying properties for $300,000, $400,000 sort of thing. There was even some cheaper, $250,000, a couple of them. I've been playing in that real lower end of space. So I've been using money partners to buy the properties outright, and I've been, typically paying money partners sort of 15% per annum return on their investment. So a big thing that I've been doing is I've been using money partners to purchase the property, and then I'd sort of fund the renovation. And because I'm in and out of the deal so quickly, the return I'm giving to the money partner is sort of insignificant. Like they might be making 15, 17 grand or something like that, but I'm still making 100 or 50 grand profits.
Yes, exactly. So that was my next question. Wouldn't you want to scale this up using the same money partner model and add that to your advantage?
Yeah. I mean, look, at the moment, like I think I'm probably 9 or 10 deals this year so far. So I don't really want to do too much more than that, to be honest. That's kind of, enough deals, to be honest. Like it's I mean, if I'd need a much bigger trades team if I was to do much more than that to be able to do it all. So my thing is at the moment, the way I'm sort of scaling is I'm doing my flips, but then I'm also, building my other business, which is, my course and coaching other people how to flip property. So rather than just trying to go crazy and do 20 or 30 flips a year, I'm sort of comfortable with sort of around that 10 flips a year, make good money from that, but then also, put my energy into course and coaching others.
And it's important, I think, knowing your risk appetite and knowing your passion and, stretching yourself not to the extent that, you start burning yourself is very important to a lot of these things, right? A lot of people ask me that questions all the time, that why only do 10 developments every 2 years? And I say, well, that's my appetite, right? I don't want to do any more. And yes, I can, but that doesn't mean that just because you can, you should. And so it's a very genuine point. I can completely resonate to that.
Yeah. I mean, if the market was to come off, I mean, I'm pretty, I believe, the people I speak to, that Perth's still got a fair bit more growth. So yeah, look, but at the same time, like you said, like if the market did come off, something happened, that just changed, like COVID, for example, when the market you just see, I only want to have sort of 2 or 3 on the go at once. Because I typically, if I'm doing like, 9 or 10 flips in a year, each quarter I'm sort of doing, no more than sort of 2 or 3 at one time sort of thing. So that's enough for me to manage and then sort of put my energy into, other areas as well.
Definitely. And so when we talk about the transition into the renovation space, let's talk about 3 key influential people that have basically helped you move into this space or change your mindset completely. I know you talked about one of the coaching sessions that you did for, renovations.
Okay, as far as people that have had the biggest influence on me, moving into this space, that would be, okay, I mentioned John Lindemann before. Like he's probably one of the, I still speak to him. He provides me a lot of data and that sort of stuff. So I use him as a way of being comfortable, with that sort of stuff, with data and, making sure that it's still heading in the right trajectory. Second would be, probably my first coach, which was Karen Baldwin. She was somebody who I absolutely hammered when I first started. I just got as much information out of her as possible. I think she did something crazy like 60 flips or something like that. So I absolutely milked her for as much information as I could, and that was she. So she was somebody. I don't speak to Karen too much anymore, but at the time I definitely learned a lot from her. And the third person would be, I don't know if I've got a third, to be honest, from this space. I think they would be the 2 people that I've...
Want to give you a call out to your wife, maybe being supportive in the background?
Well, yeah, she has to put up with me. So, she puts up with me. I mean, that's the thing. Like when you're doing this sort of stuff, you are working a lot. Like so she's at home, looking after the family. We've got 3 kids, so she's doing all the hard work there. But yeah,
and I think it's important. I think people, tend to discount thinking about the one that are close to you that are supporting you, especially when you're starting up your business, right? I remember going back almost 8 years ago, 9 years ago now, that number of hours that you put in building and growing the business because you're so passionate about it. You lose track on a lot of these things, right? So you need an anchor to bring you back every time. And definitely your close ones, your family plays a really, really big role in a lot of these things, especially when you're setting up but going for a big empire like what you're trying to do in your space. Let's talk about the real project. I think this is the most interesting one. Real project, real numbers. Let's start from the real start. How do you find it? What are the key things that you look out for when you're trying to buy it? How do you pick the market? You've talked about data, but how do you pick the buyer that you're going to sell it to? Do you do anything different when it comes to renovations?
Yeah, so I mean, like I said, I've known, I've been flipping in. I started flipping out mostly in the Rockingham area, which is part of Perth in the south, and it got hot really quickly with a lot of interstate investors and that sort of stuff. So I knew that it was a good spot to be, good location, and obviously there was a lot of price movement, so I knew that was positive. So, and the way my formula as far as sort of picking it is, I've sort of my formula is is the whatever the end price is. So first number I've got to work out is, okay, what's this house going to what's this going to sell for once it's renovated? Okay. And then I work backwards from there. So I've got to work out. So my formula is end price minus all cost minus my minimum profit margin equals my maximum buy price. So I'll give you an example what that means. So let's say, for example, the end sale price was 600,000 minus what all the costs are. So if all the costs are, I don't know, 70 grand minus my minimum profit margin. My minimum profit margin is always 60 grand. I typically want more than that, but that's my absolute minimum. So if it's, say, 600 minus all my costs minus my 60 grand minimum profit, then equals, that's my maximum buy price. So I'd always, if I know what my maximum buy price is, so let's say my maximum buy price was 400, I would know that, okay, 400 is the most I'll pay for this property. That's my walkaway price, but I'm going to go in a fair bit lower than that. I might go in at, somewhere in the mid threes. You don't want to be offering too much at the start because, you want to have that room for negotiation because you've got your walkaway price. If you offer too close to that and then, they say no, then you've got no room to negotiate.
Yeah. And do you go out to auctions looking for these properties, or is it just the off-market channel now looking for tired properties because they usually don't go out to auctions anyway because they're not, picture perfect properties?
Yeah, I mean, last year I secured 2 deals on market, but this year, no, I haven't. Like, I think every single deal this year has been off market. It's just been too hot a market to be able to compete at home opens, and Perth's not a market for auctions. It's not. We just don't do auctions in Perth. It's just not the done thing. So the only auctions you'll see at Perth are typically like your mortgagee sales from banks and stuff like that. But even if I went to a mortgagee auction, which is and it's going to be run down in that, there's going to be 10 other property flippers there. So I know that I'm not willing to pay as much as what they are anyway, because most people most people are happy to renovate a house and flip it for less than what I'm willing to do that for. So I know a lot of other property flippers are making sort of 40 to 50k profit, which for me, I just don't. It's not worth it. I'd rather put my time and energy into projects that are going to make me a better return.
Sure. And doesn't the transaction cost kills the projects? I know a lot of people always get scared from these transactional costs that gets attracted. What's stopping you from holding this? I know that you mentioned that, you have money partners, but you could potentially borrow the money from the bank and pay them out, at the end of the deal.
Yeah, look, I get this question a lot. So I'm I have a different strategy where I'm, accumulating property as well. But the main reason for the flipping, the areas that I've been focusing on, like I said, at the moment, had mostly been suburbs that I wouldn't want to accumulate property in. I mean, I know there's a lot of these, it's no offense to these areas, but I just don't want the issue with the bad tenants and that in those sorts in some of these areas, the Rockinghams, the Bananas and Armadale. Look, I'm happy to take my money and run, to be honest, rather than and you got to remember, you're buying these houses pretty run down, so they need a renovation. If I was to buy the house and then, do a full renovation on it because it needs it, and then you put a tenant in it, who knows what it's going to look like in the next few years after that. So for me, I can still flip property and make, 100 grand or more, and I can do it so quickly. So
right now, from where I see the way the Perth market is going, typically what you're doing is you're milking the growth, right? And it's an amazing strategy, right? Where to from here? If I say, Graham, what are you going to do, say 2 years down the track when the market is a bit matured and you wouldn't see that appreciation coming through? What would Graham be doing? Is there plans for Graham? Of course, you talked about your coaching.
Yeah, well, maybe I'll relocate to a better location to flip property.
Well, you start doing something maybe more higher end.
Well, I look at there's that option as well. I could look at, I think basically if you look at the data and what's happening in Perth, the property market at the moment, most of the growth has been in the lower end. So, and I've been aware of that. So that's where it's been. And what has happened is a lot of these suburbs in the lower end have actually caught up to more what I classify as like the middle market. There's not much price disparity between them and now. So, and this is the thing, like why would I be wanting to buy properties and accumulate in those areas when I can buy properties in better suburbs and accumulate those? That's my sort of thinking. But there's definitely going to be an opportunity to flip properties in that sort of middle to higher market over the probably 2024, 2025. Because I still think we've got a couple more years of growth over here, and it's going to move into that owner-occupier market. So look, there's definitely potential. Like I said, I use people like John Lindemann to provide the data. So when the market comes off in those other areas, then I'll just follow where the buyers are.
Definitely. And look, I completely agree. I think there is a massive disparity between prices, especially in far south versus the middle ring of south, very close to the Southern River and all of those pockets. And then same in the north, right? It's quite amazing, what people are paying in Clarkson and past versus, some of these lower points, around Marangaroo where the prices are literally very similar. And so it's quite interesting as to why this disparity has happened. And of course, buyers from Eastern Seaboard, don't realize that there is this massive disparity, and they keep hounding all of these areas and, following the herd and, listening to 10 different podcasters thinking that this is where the growth is happening, basically.
Yeah, I think a big part of it has to do with the buyer's agents. I think a lot of the buyer's agents just don't know the market that well. That's my honest opinion. They've driven up these markets, which are they doing the right thing by the buyers? In my opinion, probably not, because they just don't know the market that well. And so they're just chasing rental yields and stuff like that. Yeah, it's a funny one because, there is a lot of other suburbs in Perth, a lot closer to the city. There's areas closer to Fremantle where you could still probably buy for close to 600,000 if you buy the right property off market sort of thing, and you're paying the same prices in Rockingham, for example. So to me that just doesn't make sense. So, and like you said, north of the river, like north of Clarkson and stuff like that. So there's a whole lot of interstate investors that have been buying up in like Alkimos and they're just like greenfield areas. There's so much land, so much more development to happen out there. The infrastructure's still not really there. So for me, you've got to know your market, and you've got to. Yeah.
A lot of these people have never been to Perth. Like I remember, 2021 when I went to Perth and I was walking through Armadale, I was like, holy shit! Like, I would never buy here right now. The market is so low, gentrification. Yes, doing flips makes a lot more sense there. And when I saw the flood coming through, I'd be like, well, the gentrification hasn't really happened. Like people living there are still people living there, right? I don't see any income level changes, etc. So I completely agree. I think buyers agents there's a lot and shit ton of buyers agents right now who are, coming into the market trying to chase yields. Perth have already known itself for higher yields. And so, this could end up being 2015 as well, like the mining boom and, market adjusts and comes back. So, touch wood.
The other thing I just want to touch on that as well is, these areas that the Rockinghams and the Bananas and the Armadales, which I said I don't really want to accumulate property, but I'm happy to flip there. Because every second, or probably more, like because 9 in 10 buyers are an interstate investor, like to me, I look at it and go, well, it's going to be a lot of rentals in this market, a lot of rentals. So for me, I think to myself, like, do I really want to be in a market where, like, when the mining does come off eventually, you're going to have a lot of, people, if people do leave the city again, which has happened in the past. And I know a lot of people say, oh, that the city's changed and all that. But I've sort of been here my whole life, and it's still very much driven. The economy is still very driven by the mining industry. And so if Perth does come off the boil like it did in 2015, like it did in 2008, then I don't want to be in markets where it's, predominantly renters. I'd rather accumulate properties in owner-occupied locations.
Definitely. I completely agree. I think owner-occupiers is what drives the growth in any market, and typically that's the best strategy from a long-term perspective. When there are investors so much invested in one area, then naturally they all disappear at the same time, because they all become paranoid at the same time as well. So Graham, let's get right into the numbers. Let's talk about the real deal in the field. Let's talk about the Armadale deal that you're talking about, which is the shining armor and the star that you're wearing on. Let's talk about that. How did you find it? What are the numbers? Let's go through some of those details.
Yeah, okay, yeah. So the Armadale one is the most recent one I've just completed. It's literally gone under off about 10 days ago. So it's a property I secured in May, as far as I got it under contract in May this year. And I think I settled in about the 18th or 19th of August or something like that. So it was only a 5-week renovation, and I sold it, sort of first week of October. So I bought it for $250, which was an absolute, bargain. You definitely make your money when you buy a property.
Was it like a drug house or something?
Yeah, no, I won't say that. But no, it definitely had a couple of interesting rooms though. Had one or two interesting rooms, but no, it wasn't a meth lab or anything like that. But yeah, so I spent $60,000 on the renovation, and I just sold it for $525. So that was a really good outcome.
Amazing. And so of course it came off from your off-market channel. How did you know this was the right? Was it just the price that was dictating it, or how did you find this? Talk us through in relation to the search, and then what was the market sort of study looking like? Yes, you were looking at the investor market, but what did you do to the property for $69,000?
Yeah, 60,000. So look, it was. I knew the area was obviously hot, so I targeted the suburb. I did letterbox drops, that sort of thing, and look, regarding the actual renovation, it's all about the price. So it's all about being able to secure the price. You do your feasibility. I know, okay, what the end sale price is going to get when it's renovated in Armadale, and then you're obviously working backwards, so therefore you can work out what your buy price is. So at $250, I knew I was buying this property exceptionally well, and then because I knew it was a hot area, I also knew I was going to get growth. So when I initially did my feasibility, I think I worked it out as an end price of $470, and I ended up selling it for $525. So I got some growth in there. So, when you break down the profit, I made 170 plus on this project, but because I bought in a suburb with growth, there was an extra, so $50,000 that I probably wouldn't have got. So don't get me wrong, I would have been happy with 120,000 profit, which is what I initially forecasted. But, when you're picking the right suburbs, you're looking at the data and you're picking areas where there's growth, then obviously you're getting that added growth, which adds to your profit.
And what do you get for $60,000 when you're renovating? Is it like brand new kitchen, brand new bathroom, everything brand new, like flooring, carpets, etc.?
Yeah, so I gut the house with this. Not always, but for this house, definitely, I gutted the house completely. So, literally have demo, take everything that's in there out, keep the 4 walls and the floor and the ceiling. That's about it. Even the ceiling needed a good touch up. Actually, there was a fair bit of water damage and that sort of stuff, so that needed a bit of attention. But what does $60,000 get you? Yeah, it gets you a new kitchen, new bathrooms, gets you new flooring, new lighting, blinds, paint throughout, inside and out, and render the front lawn, and that's about it.
Amazing. And any recent projects that you're doing that you are looking at it and you'd be like, I'm going to beat this record now and make more?
I've had a few good results like that this year. I think 3 projects the 3 better ones I've had was sort of 170, 150, 140 sort of profits. I've had a lot around the sort of the 100 mark, but they're not all that good. They're not all, you can't expect to have those sorts of profits every time. So the project I've got at the moment is not going to be as good as that. I've got one on the go at the moment, and I think I'm forecasting, probably 80,000, something like that, which is obviously nothing to sneeze at, but it's not going to be as good as the Armadale one I've just completed. So I've got the one at the moment, which is the one I'm currently doing at the moment is in Parmelia I just literally sold another one last month in Palmyra, so I finished another one. I made 110 on that one, whereas this one I'm doing in Palmyra at the moment, I'm probably forecasting maybe 80 or something like that.
It's amazing. And so the buyers who are buying this, don't they question that, this was bought 5 weeks ago, 2 months ago, and this is coming out, with all the information available out there? How do you navigate that, or how does real estate agents navigate through some of those answers?
It's funny you say that, because my agent, Nikki, actually just had this conversation with me about a week ago when the property was under offer, because she actually said, "Oh, Nikki, but he only bought it like a last month for in August for 250," and Nikki was like, "So like, it doesn't matter. That's what 4x2s, renovated 4x2s are selling for now. They're selling for 525. So so it's not like they paid too much, because that's there was 9 offers on that property. So So look, the thing is, when I'm buying houses that need a lot of work. These are not houses that you would want to live in as is at the moment. Do you know what I mean? So majority of people would not purchase it in the condition that I purchased it.
Yeah, no, definitely. And look, I think all of this sounds really, really awesome. Looking forward to your course that is coming out, and I'm sure that people who would be poached by you or who would listen to you, they would do wonders in this amazing space. Of course, renovations is something that I'm always scared of, because I don't have a creative bone in me, but it's an amazing space. It's an amazing space that delivers quicker returns, that, if you know how to do it, and if you are ready to put the effort in, the results are amazing.
Yeah, absolutely. I mean, it's good, quick money. I mean, if you're someone that's sort of starting out in an investing journey, rather than sort of the old traditional buy and hold, or even if you're someone that has aspires to do development one day, renovations can be a good way to start, because flipping, like you said, you're getting paid in sort of 3 or 4 months, versus a lot of developers aren't getting. It's taking 1, 2, 3 years to get paid per development. So it can be a lot more chunkier and more rewarding in development. But if you're starting out and you want to build up cash flow, then flipping houses is a very good way to get started.
Any parting words, Graham? If I ask you to basically, say one sentence about, renovations, and, if people who are watching you, listening you, what would you say in relation to, where can they find you, how to reach out to you? What's the easiest way?
Yeah. So, I mean, look, I've just started an additional business. It's called Redmain. I've got releasing a property course that actually comes out October the 16th. So it's next Monday. And I'm also coaching some people, so helping other people do what I do. So if they want to reach out to me, by all means, jump on my website, redmain.com.au. Or you can jump on my socials. I've got a Facebook group, Flipping Houses and Buying Off Market. So you can reach out to me on all my socials as well as Wits_flips. So WHITTS_flips. You can sort of reach me on there as well.
Perfect. And look, thank you for finding time coming in today, Graham. This was lovely. It was amazing to hear your story. You have done really, really well. Super proud. I think this is a true story of starting completely different and pivoting during different times, and making sure that you can build along and learn along the way as well. So an amazing story to share. Thank you very much.
Thank you. I really appreciate it.
Thank you. For viewers, listeners, if you have any questions, comments, please drop it into the comments below. If you have any questions that you want me to pass on to Graham, reach me out at moss@helpmebuy.com.au. Thank you for listening to me. Take care, stay safe, keep investing, keep smiling, keep renovating. This is Graham and Moss checking out. Adios.
Thank you.